What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock, reasons why you should be buying this stock right now before earnings. If been waiting to dollar cost average, stuff like that. And also, we are going to be talking about the competitors, our largest competitors right now, not necessarily our fintech competitors, but our legacy banking competitors. And right now I've narrowed it down to about six companies. You should know right off your head right now, the three largest banks in the world. They're going to be in there. We're going to be talking about them. But guys, what I'm seeing right now is I'm seeing a perfect analogy is the exact same story with Netflix versus Blockbuster. And why this is a good comparison is because in this sector, banking, it comes down to, how quick can you get your product, these, branches, these, locations, are they still necessary? And the data is showing, that the newer generation of, people coming up, the young bankers, the millennials, we're at like 80% digital right now, okay? Nobody's going into these banks. And even some of the older legacy customers are, finally starting to flip over, in that, older age bracket, maybe like, 60 to 70. I know my grandma right now, she's even on the online digital banking app for her bank right now, and I help her with it sometimes, because she's not going to switch over to SoFi. And a lot of these older people are not going to do that because this is all they know. They only know the legacy banks that have been around for 100 to 200 years. And guys, this is going to be one of the best videos that we've done. I've really spent a good amount of time getting these numbers for you and data and showing you guys that these legacy banks, specifically two out of these six competitors, are looking rough. I'm telling you right now, these guys are hanging on by a thread. Two of these competitors. I mean, the numbers are looking really bad. All right, guys, so I really hope you enjoyed this video today. So be sure to smash the like button anytime throughout this video. If you decide it's a good video, you enjoy it, so more and more people could see it, be sure to drop me a comment, anything that you agree with me on, anything that you disagree on, because I love to have a conversation. Let's get into it. Well, the first thing I want to get into of why you should be buying the SoFi stock right now is because we just had I believe 3 to 4 big bank earnings, and we have like 2 or 3 more of the bigger ones coming out this week. And guys, it was not that bad. It was solid. Some of these guys, beat their expectations. So we're going to be looking right here. Friday, JP Morgan Chase. Scroll down a little bit. JP Morgan shares, the biggest of the U.S. banks by assets, rose more than 2% after the firm posted fourth quarter profit and revenue that topped expectations, guys. Interest income at the bank surged 48% on higher rates and loan growth. Okay, so there you go, guys. Okay, higher rates are pretty good for banks, but it just depends on what sectors that the banks are in. Some of them could be heavily into investment, trading fees, mortgages, personal loans. So all of them are not going to be seeing this, because some banks are in different sectors. Well, like we're going to show when we go to these other ones. Bank of America tops expectations as higher rates help offset declines in investment banking. So there you go. They didn't go all in on investment banking, so the higher rates, covered them. Okay, so that's what being diversified as a bank, these higher rates can save you. So Bank of America reported better than expected fourth quarter earnings Friday. Revenue topped Wall Street estimates. Now we go over to Wells Fargo. Shares rise even as banks' profits cut in half by higher reserves, settlement costs. So as you can see, a lot of things are going south for Wells Fargo. Wells Fargo net income tumbled 50% to 2.8 billion. The big decrease was driven in part by lower mortgage banking on fewer originations. So maybe they are really heavy in the mortgage business. You didn't see that on Bank of America and Chase earnings, okay? You see that on Wells Fargo. So that's that diversification. The management looks like they went the wrong way, while JP Morgan and Bank of America are headed north. Wells Fargo is headed south, and these are the top 3 banks, and it looks like one management team is doing the wrong thing. Citigroup fourth quarter profit declines by 21% as bank sets aside more money for credit loss. Citigroup has hit a snag amid concerns over a global economic slowdown and as central banks around the world battle inflation. So it looks like Citigroup is getting hurt globally. And I believe, when that Russian-Ukraine war happened, they had a lot of business with Russia. So it looks like that's what's going on with Citigroup, compared to Bank of America, JP Morgan, Wells Fargo. So everybody is kind of in different directions. And it looks like Bank of America and Chase are doing everything right now. Okay. They are surviving this, mild recession. And, these are the largest banks in the world. And then we also have, Goldman Sachs and Morgan Stanley who haven't announced their earnings we'll be looking at. All right, guys, now looking into these competitors, now that, 2022 has completed, these numbers are, going to be probably, I'd say 95% accurate because, Goldman and Morgan Stanley haven't, announced their earnings. So these are kind of estimates. Chase Bank produced $45 billion profit, and they have a PE ratio of 12 right now. Bank of America, 31 billion profit, PE is around 11. Wells Fargo, 20 billion profit, PE 11. Morgan Stanley, 16 billion profit, PE 13. Goldman Sachs, 17 billion profit, PE 11. And then Citigroup, 19 billion profit, PE 6. Okay, so these are SoFi's 6 largest competitors in America right now. And a lot of these banks, have, global business, okay? But what you need to realize is, take a look at this, guys. Just 5 years ago, look at the earnings on these banks. You always wonder why these dang PE ratios are so low. It's because the earnings growth is just so low. 2018, Chase put up 44 billion. That's literally 1 billion less than what they just did. Bank of America, 32 billion. That's 1 billion more than they did this year. Wells Fargo, 24 billion. That's a $4 billion decline. Morgan Stanley, pretty nice earnings growth, guys. Look at that, a 5 billion, plus in earnings growth. Goldman, a 7 billion earnings growth, from 2018. And then Citigroup, we have a $5 billion decline. And then I want you to remember, I was talking about the 6 competitors. I saw 2 of these competitors as, hanging on by a thread. When I say hanging on by a thread, I'm talking about, just absolutely no growth at all. And that is Wells Fargo. Look at their 2013 numbers. They did 34 billion, guys. That's a $14 billion decline in 10 years, guys. I mean, that is red flags all around. And these guys are holding up the exact same PE ratio as Chase and Bank of America. Guys, this needs to be like cut in half right now. I don't know how Wells Fargo is hanging on. I believe this is those legacy banking investors that, just are so stubborn and just feel like Wells Fargo is going to turn it around. And then you also have Citigroup. These guys put up, 29 billion in 2005. That's a $10 billion decline in 18 years. So these are some serious red flags from our 6 largest competitors, but 2 of them are showing some very, very nasty declines in profits. 10 billion and 14 billion. I mean, you're seeing nothing. And what is that, guys? 1 to 2 decades. So I don't even really consider these guys, competitors anymore because they're just going backwards and backwards. They're just trying to hang it on, just milk the last bit of profits they can. And I see these profits continuing to go down into potentially the single digits, in the next 5 years or so. That is definitely possible. And they're going to be hanging on a thread by their last bit of legacy customers that, won't switch to digital banking, are continuing to use, those locations because, that's all they know. And the thing is, guys, these locations are declining massively. Okay, take a look at Chase, guys. Locations right now, 5,000, Bank of America 4,000, Wells Fargo 4,600, Morgan Stanley 600, Goldman Sachs 0, online, digital as well. And, they also had, some of the best earnings growth. So watch out for Goldman. Citigroup, it looks like 700 right now. And look at the Founded right now, guys. The Founded is what I've been talking about forever. These guys have not made any type of shifts because, well, most of them haven't because you look, guys, I mean, these guys are still sitting on thousands of locations right now. 223 years ago found it for Chase. 200 plus years. Bank of America, 93 years ago. Wells Fargo, 171 years ago. Morgan Stanley, 88 years ago. Goldman Sachs, 154 years ago. And Citigroup, 211 years ago. So guys, I mean, this is our largest group of competitors right now. And I gave you guys a little analogy at the beginning of the video. It sounds like a little bit of a joke when I say the Blockbuster to Netflix comparison, but guys, this is exactly what's going on. And these big banks are trying to kind of hide it by, just milking these profits. I mean, Wells Fargo and Citigroup, I just showed you guys the two of the six competitors. These guys are declining, 10 and 20 years of declines in growth. Nothing's happening. They're hanging on by a thread. The other four, are probably trimming locations, cutting employees, building out their digital apps, trying to make the shifts. I still don't think the four of them are going to survive as well. We might only have one or two, and possibly, right now it looks like Goldman, I don't know if this is 100% accurate, but it does say 0 locations right now. They might have a couple, but they have had the best growth. Look at that, 10 billion to 17 billion. When you look at these, 2018 to 2022 profits, Goldman is doing, the best right now. And Morgan Stanley's not doing too bad, and they only have, 600 locations. So it looks like whoever has the lowest amount of locations right now is thriving the best as far as flat out growth. And I don't think Chase and Bank of America have decided to make the big shift of, cutting thousands of locations because of the type of user that they have. We got to find out, what the exact age is, demographics on these users, but it looks like they can't cut these guys out of locations right now because that's where a lot of their profits are coming from, those legacy banking customers. So right now, guys, you can narrow it down to your top four: Chase, Bank of America, Morgan Stanley, and Goldman, and then Citigroup and Wells Fargo. I mean, these guys are looking like dinosaurs. Like, we always make these jokes about dinosaurs. I mean, these guys are legitimate dinosaurs. The other top four, we're gonna see, who makes it out. Now we're gonna go over to why you should be buying SoFi right now. Okay, number one, Noto just bought $5 million worth of SoFi 27 days ago. That goes back to the beginning of the video when I went over the bank earnings, where we saw, strong earnings in Chase and Bank of America, okay? Wells Fargo had the mortgage, problems, too heavy in mortgages, and Citigroup, it looks like, there's still global problems they're having. And we haven't really seen Goldman and Morgan Stanley. But overall, the big banks with good management, Chase and Bank of America, put up some strong numbers. So that's probably what Noto's seeing right now in his online digital bank. Extremely strong earnings. Oh, and that's just exactly what I said. Bank earnings beat estimates due to higher interest rates. These higher interest rates are from Q4, and we're still jacking up interest rates this year. So Q1 is probably going to be extremely solid. And then another thing I want to show you guys, a third reason is SoFi's stock-based compensation has declined quarter over quarter when you compare Q2 to Q3. So take a look at this, guys. This is the Q2 earnings. And you can see here, share-based expenses, compensation, 80 million. And then if we go over to Q3, 77 million. So the stock-based compensation that people have been talking about for years is declining. And, we also had somebody on Seeking Alpha, a gentleman, I forgot his name. I think it was a Chris, maybe. He did an interview with Chris Lapointe, CFO, and basically what he was saying was, the big compensation that you're seeing on, Anthony Noto's, revenue or whatever, or how much he's making, it's at 100 million. He won't even be getting those, stock-based compensation rewards if he doesn't hit, $25. He has to hit $25 to get that $100 million payout by 2026. So it's basically like a Fugazi, on the earnings right now. He's not really getting it. It's just like sitting there. He has to, hit the numbers that the company wants to get that 100 million. So that's where a lot of those, bogus numbers that Anthony Noto made $100 million are always coming from. So that's not true. And then if you see he hasn't got that 100 million and he's putting his own 5 million that he has inside the stock right now, he's seeing that the company is headed into the right direction with this bank charter. And I think, you're going to see a snowball effect very soon with these extremely high interest rates. Even without student loans, I think SoFi is going to continue to have earnings losses decrease, and we're going to turn a profit out of nowhere. Take a look at this, guys. This is the biggest U.S. banks by total deposits. Of course, this is not accurate. It's 2021. You can see the number 250 bank deposits isn't even at 5 billion. And we see right now, SoFi just last quarter passed 5 billion. So when we look at straight up deposits, guys, I mean, we are in the top 250 right now. Look, a lot of these are 4 billion still, 4 billion, 4 billion. And then 234, gets us our ranking, at 5 billion. But let's say we get to, 10 billion, out of nowhere the next, 2 quarters or so. Look, guys, 7 billion, 7 billion, 8 billion, 8 billion, 9 billion, 9 billion, 9 billion. Right here, guys, that'll jump us up another 100 spots with these deposits. So we need to get, up higher into that, 100 billion plus where, you see these big guys, JP Morgan, Bank of America, Wells Fargo, Citibank. Those are the four we just discussed. 2 trillion, 1 trillion, 1.4 trillion, and 1.2 trillion. I mean, these guys got $1 trillion in deposits, and that's cutting their costs dramatically. And then, the other two, we're going off of market cap. So these guys aren't topped by, United States market cap. It is Morgan Stanley and Goldman Sachs. Goldman Sachs, 200 billion, and then Morgan Stanley, 100 billion. So like I said, I want to see us get to 100 billion in the next couple of years. I mean, 100 billion will put us into, what is that, top 30 for deposits. So deposits are growing fast. They might even speed up, quicker and quicker. We won't know. I mean, maybe we'll be getting, $5 billion in deposits per quarter. You just don't know with, what SoFi is offering right now. We just got to remain patient, watch those deposits grow, watch the cost cutting come down. And guys, take a look at this. I mean, this was, an update just recently. Wells Fargo and Bank of America are closing over a dozen branches. I mean, this just continues to happen and happen and happen. I mean, these banks are closing locations. Citigroup to close about 100 branches. This was, 2 years ago. Declining foot traffic, of course, has had to do with COVID, but I'm just telling you guys, there's so many reasons why branches could be closing. I mean, there's just so much risk in having branches, especially with that, the age demographic, being younger for up and coming bankers. Nearly 2/3 of the U.S. population, 65% of the U.S. population use digital banking service, while almost 80% of millennials are using digital banking in 2022, while only 48.5% of baby boomers reported the same. So basically, half of those, users right now you're seeing with those top 6 banks might even not be using digital banking. So it's 80% compared to 48% millennials versus baby boomers. So the number of people using digital banking has increased by 4% since 2018. Only about 27% of Americans use online only bank. So there's just so much room to grow, as you guys can see right now. And there's just so many reasons when we actually take a look at those earnings. You can go back in the video. 2 of those earnings haven't had growth in 10 to 20 years. And the other ones, all had the exact same growth as 2018. So, I think we're going to be down to, 2 banks that are going to be struggling to survive in the next 5 years or so if they don't make this digital shift, exiting these branch locations. And they really can't do that once again because of the types of customers that are banked with them. They're legacy customers. All they know is, branches and stuff like that. So they have a lot of problems on their hand, and it looks like they are not making adjustments like they need to. They are more milking the situation, kind of like what the cable industry is still trying to do right now. Because remember, guys, I used to work at Spectrum, Charter Communications, 3 to 4 years ago. And I just told you, they just kept trying to push cable to their older users, trying to milk that, even though, everybody's switching over to, Roku and Peacock, Hulu and stuff like that. So this is the exact same situation that's happening. I think this is, a perfect comparison, Blockbuster and Netflix. It's the branches that are making the digital shift in banking. It's just been hidden for so long. And now that SoFi has a bank charter, they can really push back and acquire these users and, service them better. So Really hope you enjoyed this video. If you enjoyed this video, be sure to subscribe to the channel. Be sure to smash the like button. We will be keeping you updated daily. Once again, my name is Kyle. Hope you have a great day.